Also, most of the taxpayer receive financial credit notes or GST credit notes for post-sale discounts, which are for marketing or for sales returns. How do you think whether this would be eligible for input tax credit?
Yeah, so financial credit note or commercial credit notes are transactions which are outside the GST law. Now, if let me talk about the credit note. So here is a case where I have an outward supply, and under the GST law, you have under certain circumstances where you can issue a credit note.
Right.
One could be, let's say, the sales return.
Right.
Or there could be cases where you have overstated or understated a value. If you have overstated, you issue a credit note to kind of bring it to the value which you would want. Or if you have charged a rate which is higher, then you give a credit note for the differential rate. Or there could be certain corrections, right? So those are the cases where you kind of bring about. So that's where you have a GST credit note, and all of that come with a certain timeline. Now, wherever you give, let's say, certain incentives which are known at the time of sale, there again you can kind of give GST credit note and then happily kind of disclose it, and then kind of comes into the chain. But the issue kind of comes in, or the entire problem statement is where you issue credit notes which don't have GST. So these are the financial credit notes. So there it is only the value of discount or value of reduction in terms of negative value, if I can kind of call it, which is kind of done. And from a customer perspective, that nets off the payable which he has to kind of do to the supplier. So if I take an example here, let's say if I raise an invoice for 10,000 with a tax of, let's say, 1,800, total payable becomes 11,800. But if I give a credit note which is with tax, it reduces both value and tax. But if I give a credit note which is financial or commercial, it only reduces the value, not the tax. And it is not reported from a GST perspective. So there are significant challenges, I would say, in GST law for financial credit notes. I mean, this is something which I foresee to come, but as present, it is a common practice where many of them are issuing these financial credit notes.
Absolutely. It's been 7 years of GST, and to overcome various practical issues, financial and commercial credit notes are being issued left and right.
Yeah, absolutely. Yeah. So because and somewhere if this really becomes an issue, I'm sure there is where I see a sleeping volcano becoming live. Now, let me kind of illustrate how this could kind of impact the company. Now, every provision, right, every law in certain cases has certain things which are where they would want to kind of plug a mischief. So they would want to kind of look at those stray exceptions and generalize them and kind of apply them to all. So likewise for ITC, there is a mischief provision in section 16.2, I'm so sorry, where in 16.2 what it basically says is if I'm the person who's wanting to kind of take credit, I can take credit to the extent the value I pay and the tax payable thereon. So if there is a financial credit note which kind of comes in, because financial credit note reduces the value, right? So then the implication is what? That to that extent and the tax payable thereon is what you can kind of take credit. So just to illustrate, in the example which I gave, 10,000 plus tax, 10,000 plus 1,800 is the original invoice, and consider that I gave a financial credit note for 10,000. So first it was 10,000 plus and 1,800, 11,800 minus 10,000. So what have I done? I have only passed on tax to my customer. So the mischief here is what? People who have ITC, if they want to pass it on to their customers, can conveniently do by raising an invoice, charge applicable tax, and then raise a financial credit note without impacting the output tax. Then my ITC gets shifted on to my customer. So to plug that is where you have the 16.2 provision to say that wherever when you would want to kind of take credit, the amount on which you can take credit is the value and tax payable thereon. Here the value by virtue of financial credit note will become 0. Tax payable on 0 will become 0. So people, but now what will happen is, if you see the industry, most people are kind of taking the full credit. They are saying that, see, so long as I have paid the tax to my vendor has paid it to the exchequer, where is the issue? So there is, I mean, this is 16.2 is the mischief which can kind of come in. But on this, we have a circular which government has kind of issued, where on financial credit notes, I think here again that circular number 92 was issued. Then somewhere in June, there was another circular 105 which kind of came in. And then in October, that circular number 105 got withdrawn. So what has the government done? They issued a circular saying financial credit notes is okay, does not have an impact as regards credit is concerned. And then they issue another circular withdrawing that. So it is like chad bhi mera, pat bhi mera. So they have left the entire war zone open. Right? So they could, I mean, people who have done also, they have kind of, they don't know whether they have done correctly. People who have not done also, so it's basically kind of playing. So somewhere government has not, I mean here particularly, has not kind of come out with a clear position. And certainly wherever such circulars which are issued and then withdrawn, I think there also needs to be an equal immunity, because people have relied on the circular and they are doing it. But unfortunately, we don't have such kind of a immunity in tax. Then what happens, an innocent taxpayer gets exposed to significant kind of implications. And the implications is not on the supplier, implications is on the person availing credit. And more often what happens, because of the way the margins are, if a credit, due credit gets denied, it comes with interest penalty. And it takes away or makes him completely out of business. So therefore, what you touched upon, Suresh, is a very, very important aspect, right? And this is something which I see that if a show cause notice were to be issued, other than let's say reconciliation, this could be something which will kind of cover maximum number of assessees, because that's the trader community which India has, and that is the what do you say, the ordinary that the number of credit notes which are financial credit notes and commercial credit notes which are flowing in is that much in number.
Considering the restriction imposed under section 34 for a GST credit note, the issuance of financial and commercial credit note has been left and right.
So one aspect is that GST law is very restrictive in terms of when can I issue a GST credit note. But what is left open is that yes, I need to kind of issue credit notes which are not something which is provided for in the GST law. What happens to that? So the mischief rule is where the issue is. And that's where I think industry has to be very, very cautious about it. While you could issue financial credit notes, it should be more of an exception and not something which is ordinary. There are several ways where you can plan your business, achieve the same result in the four corners of law. Financial credit note is not the only way to achieve the end result. There are ways in which you can kind of mitigate and still achieve what you want to, other than by way of issuing a financial credit note. So the urge would be to follow those rather than issuing financial credit notes as an ordinary practice.